3 years ago, Florida was the most coveted real estate market in the United States. Every metric pointed to a state that had unlocked something permanent. A pandemic-era migration wave was delivering hundreds of thousands of new residents every year. Remote workers were fleeing the cold and the taxes of the Northeast and Midwest, and landing in Florida with California equity checks and New York salaries, buying homes at prices that Floridians had never imagined their properties were worth. Investors followed. Builders scrambled. The inventory that existed could not satisfy the demand that was arriving. Prices rose 51% between March 2020 and June 2022, the most dramatic appreciation in the state's modern history. And then, in the space of 3 years, every single condition that built that surge changed. Today, Florida leads the nation in foreclosures. Florida ranks as the worst state in the country for home price declines. According to multiple national analyses, Florida's condo market has 2 months of supply statewide, more than twice a balanced market, with prices falling in 92% of major condo markets simultaneously. Florida's domestic in-migration, the engine that powered the entire boom, has collapsed 93% from its 2022 peak. The state that was attracting 310,892 new net residents in 2022 attracted just 2017 in 2025. Alabama had higher net domestic migration into its borders than Florida in 2025, according to the U.S. Census Bureau's vintage 2025 data released January 27, 2026. The phrase, free fall, is one this channel does not use lightly. We do not use it for markets that are softening or normalizing or correcting at the margins. We use it for markets where multiple simultaneous forces are pulling the same direction at the same time, where the data from multiple independent sources tells the same alarming story, and where the gap between what the public has been told and what the numbers show has grown too wide to ignore. Florida's housing market is in free fall, and this video is going to show you exactly why, force by force, market by market, number by number. Force number 1: the migration machine has broken down. Everything about Florida's pandemic-era housing boom traces back to one-engine people. Specifically, the extraordinary volume of Americans who chose Florida as their destination during the remote work era, and who arrived with the purchasing power to drive prices to levels that the local workforce could not sustain on its own. In 2022, Florida gained 310,892 net domestic migrants, according to U.S. Census Bureau data. That was the highest in the nation. Florida ranked first among all 50 states for net domestic migration 2 years in a row, 2021 and 2022. The housing market priced itself for that inflow to continue. In 2023, net domestic migration fell to 183,646. In 2024, it fell to 58,411. In 2025, it fell to 25,717. From 310,892 to 22,517 in 3 years, a decline of 93%. Census Bureau released those figures on January 27, 2026, less than 7 weeks ago. They confirm what the housing data has been showing for 2 years. The buyers who drove Florida's boom are no longer arriving in the volumes the market was priced for. Realtor.com senior economic research analyst Hannah Jones, commenting on the census data, stated, Florida's dramatic 93% drop in net migration compared with its 2022 peak reflects a market normalization after the pandemic-era relocation surge. She connected that migration collapse directly to housing consequences. Growing home supply has softened demand in parts of the state, contributing to slower price growth and longer time on market. Together, these dynamics increase the risk of foreclosure for some homeowners, particularly those who bought near the peak of the market or are carrying high debt loads. Florida in 2025 had lower net domestic migration than South Carolina, Idaho, North Carolina, Texas, Delaware, and Tennessee, and critically, lower net domestic migration than Alabama, a state whose economy and housing market had never competed with Florida's for the attention of domestic movers. The buyers are not coming in the numbers the market was built for, and no amount of local market optimism changes that arithmetic. When a market prices itself for 310,000 annual arrivals and receives 22,000 instead, the gap between expected demand and actual demand eventually shows up in prices, inventory, and foreclosures. All three are now showing it simultaneously. Force number 2: prices are falling statewide. And the data is worse than the headlines. The Florida housing market has a headline number problem. The headline median sale price for single-family homes, the number that Florida Realtors reports monthly, does not fully capture the depth of the price deterioration. Because when the mix of homes selling shifts toward higher-priced properties, the median can hold while individual homes at specific price points are declining sharply. To understand what is actually happening in Florida real estate, you need to read past the median. The FAFA House Price Index, which tracks repeat sales of the same properties over time and is not distorted by the mix of homes selling, showed Florida falling 2.3% year-over-year through Q3 2025. During the same period, the national index rose 2%. Florida underperformed the national average by 4.5 percentage points on a repeat sales basis. That is the most accurate measure of what is happening to the value of specific homes owned by specific people, and it is pointing strongly downward. Zillow's statewide data shows Florida's median home value down approximately 5% over the past year, declining from around $396,000 to approximately $374,000 as of November 2025, according to the Home Buying Institute's analysis published January 18, 2026. The Case-Shiller Index for Tampa has posted 13 consecutive months of annual price declines, down 3.9% year-over-year through November 2025, 13 consecutive months, more than a full year of unbroken price erosion in a city that was, in 2021, one of the 5 most competitive housing markets in the country. According to Zillow data reported by Tampa Bay Business Wire, 85.2% of homes in the Tampa metro are currently below their peak values, with an average decline of 12% from peak. The Property Reach analysis published on WFTV on March 11, 2026, yesterday, placed Florida as the state with the most significant home price declines of any major state in 2026, with prices falling across Tampa, Orlando, and much of South Florida. Jacksonville led all major American metros in year-over-year price declines in Redfin's analysis at multiple points through 2025, with prices falling 3.1% in Redfin's year in review and reaching 5.6% year-over-year in Redfin's November 2025 data. Cape Coral's typical home sold for nearly 7% less in August 2025 than the prior year, and was more than 13% below the August 2022 pandemic peak, according to Realtor.com's analysis. Northport's typical home sold for 20% less than the August 2022 peak. And the condo market, which accounts for a massive share of Florida's total housing stock, tells a story that the single-family data alone cannot capture. Median condo listing prices in Florida were down 10.8% in the first half of 2025 compared to the same period in 2023. In Tampa, condo prices fell 10.9% in 2025 according to Florida Realtors data. In some Gulf Coast cities, condo prices are down 20% year-over-year or more. The headline number that says Florida prices are down a modest 0.9% for single-family homes understates what is happening to the actual value of properties across this state. The repeat sale data, the metro-level data, the price per square foot data, the condo data, and the segment-specific data all tell the same story, a story that is significantly more alarming than the headline median suggests. Force number 3: inventory at decade highs, and the sellers are running out of options. When a market's buyers decrease and its sellers increase simultaneously, the result is mathematically inevitable: inventory builds, days on market extend, and prices come under sustained downward pressure. In Florida, both are happening at historic scale. Florida has more active listings than any other state in the country. By mid-2025, statewide active inventory reached approximately 167,000 homes, representing roughly 15% of all active listings in the entire United States, according to Realtor.com data. Inventory grew 24.5% year-over-year through Q3 2025, according to Housecanary's analysis of Florida housing data. The median days on market statewide reached 80 days by late 2025, according to the Home Buying Institute, significantly above the national median of 50 days. In Q3 2025, Florida properties were sitting on the market for a median of 74 days, up from 58 days the year prior, a 27.6% increase in how long sellers are waiting for buyers. 1 in 3 active Florida listings, 33.6% statewide, carried a price reduction as of mid-2025. In Southwest Florida metros, that figure exceeded 40%, according to LongYield's February 2026 analysis. January 2026 set a record for new listings in Florida, the most new listings in any January going back to at least 2008, according to LongYield's analysis using Florida Realtors data. Single-family new listings were up 7% year-over-year. The sellers are coming. The buyers are not matching them. The condo inventory situation is its own crisis embedded within the broader crisis. Condo supply statewide reached 13.2 months, more than twice the 6-month threshold that defines a balanced market, according to LongYield's February 2026 analysis. In the Fort Myers and Naples area, condo-specific supply reached 13.6 months as of early 2026 according to local realtor data. Condo listings rose 37% from June 2024 to June 2025. Half of the top 10 American metros with the most unsold condo inventory are in Florida, according to LongYield. And in a revelation published by Fortune in October 2025, a portion of that inventory collapse is not coming from motivated sellers. It is coming from unmotivated sellers who listed could not find buyers at acceptable prices and delisted. Realtor.com data from August 2025 showed that in some parts of Florida, nearly 60 homes were being delisted for every 100 newly listed homes. Miami had a delisting to listing ratio of approximately 59. Orlando had 28. Florida real estate agent Alexi Morgado told Fortune directly, "Low prices and low demand are making people who aren't in a hurry simply withdraw listings rather than sell at a low price. Inventory is down in some measures, but not because of big sales, because of delistings and slow demand. Sellers listing waiting, failing to find buyers and withdrawing. That is what the inventory data shows beneath its surface. The market is not clearing. It is stalling." Force number 4, the foreclosure crisis. Florida leads the nation. Here is the number that no Florida real estate booster wants on the screen. In 2025, Florida had the highest foreclosure rate of any state in the United States, according to Adams' full year 2025 foreclosure market report, released January 23, 2026. Foreclosure filings were recorded on 0.44% of all residential properties in Florida, 1 in every 230 housing units. That placed Florida first in the nation, ahead of Delaware at 0.42%, South Carolina 1%, and Illinois at 0.40%. Total U.S. foreclosure filings in 2025 reached 367,460 properties, up 14% from 2024 and the highest level since 2019. Florida drove a disproportionate share of that national total. In September 2025 alone, Florida recorded 4,621 foreclosure filings, the most of any state in the country that month, and the situation was accelerating into the end of the year. December 2025 saw 44,990 U.S. properties with foreclosure filings, up 26% from November and a staggering 57% higher than December 2024. Foreclosure activity in January 2026 rose year over year for the 11th consecutive month, according to Adams' February 13, 2026 report at the metro level. The concentration of Florida's foreclosure crisis is visible in specific cities that will be familiar to anyone who has followed this channel's coverage. Lakeland posted the highest foreclosure rate in the nation among metros with at least 200,000 residents in 2024, at approximately 1 in every 172 homes. In 2025, Lakeland's foreclosure rate was 0.69%, more than double the national rate. Cape Coral's foreclosure rate reached 0.23%, 2.04 times the national average. Jacksonville posted a 0.5% rate. Orlando reached 0.46%, all more than double the U.S. rate. Realtor.com senior analyst Hannah Jones identified the mechanism directly. Florida leads the nation in filings. As homeowners there face heightened affordability pressures from rising insurance premiums, property taxes, and overall ownership costs. Growing home supply has softened demand in parts of the state, contributing to slower price growth and longer time on market. The homeowners filing for foreclosure in Florida today are largely not people who made reckless financial decisions. They are the people who bought at the 2021 and 2022 peak, paying prices justified by the conditions of that moment, and are now carrying mortgages on properties worth less than they paid. In a market where the insurance and carrying costs have grown faster than their incomes, they are caught between a price they cannot recover and costs they cannot sustain. That is what Florida's #1 national foreclosure ranking looks like from the inside. Force number 5, the condo catastrophe, a crisis that has no precedent. The collapse of Florida's condo market is unlike anything in the state's real estate history, because it is being driven not just by market forces, but by law, by an act of the Florida legislature passed in the wake of a tragedy that killed 98 people, and by the mathematical reality of what happens when nearly 900,000 aging condo units are simultaneously forced to confront the cost of their own structural future. On June 24, 2021, the Champlain Towers South condominium in Surfside, Florida collapsed without warning, killing 98 residents. The collapse revealed a truth that Florida's condo market had been studiously avoiding for decades. Many buildings had been systematically underfunding their reserve accounts, deferring the cost of structural maintenance, and leaving their residents exposed to risks they did not know existed. Florida's legislature responded with landmark reforms. Senate Bill 4D and its successors required all condominium buildings 3 stories or higher to undergo rigorous structural inspections, milestone inspections, and to conduct structural integrity reserve studies, or SIRS, that would assess the full cost of future structural repairs. Most critically, buildings could no longer vote to waive reserve funding for structural components. As of January 1, 2026, all applicable Florida condominiums must actively fund their SIRS reserves. The era of "we'll deal with it later" is legally over. For buildings that had been underfunding reserves for years or decades, the cost of catching up is severe. Associations that previously collected modest monthly Fees are now presenting their unit owners with special assessments of 4, 5, and 6 figures, in some cases, far higher. The Cricket Club in North Miami levied special assessments of up to $134,000 per unit. Mediterranean Village in Aventura assessed up to $400,000 per unit, according to Longyield's February 2026 analysis. One Miami-Dade association managed by FirstService Residential needed $17 million to catch up in reserve funding in a single year, with ongoing annual reserve funding of $750 per unit on top of standard HO fees, according to its president Hector Vargas, cited by U.S. News and World Report. Median high-rise HO fees in Florida exceeded $1,900 per month in 2025, approximately $500 higher than 2024, according to United States Real Estate Investors' February 2026 analysis. Waterfront towers saw year-over-year HO fee jumps of 26%. Insurance components alone averaged $377 per month per unit in Miami high-rises. Some buildings now charge over $2,000 per month in total fees. The market has responded exactly as economics predicts it would. Nearly 900,000 Florida condo units are in buildings over 30 years old and subject to these mandates. The owners facing these costs are flooding the market with supply. Condo inventory grew 65% in Q3 2024 compared to the year prior, according to Florida Realtors. By spring 2025, statewide condo inventory had reached a 10-month supply, up more than 50% from a year prior. Sarasota County alone reached over 2,700 active condo listings by April, as sales in that county dropped nearly 20% year-over-year. Condo prices statewide are down 6.1% year-over-year, according to Longyield's analysis. Tampa condos fell 10.9% in 2025. In some Gulf Coast cities, condo prices are declining 20% year-over-year or more. 92% of major Florida condo markets are experiencing simultaneous price declines. 43% of condo sellers in 2025 reduced their asking price, compared to just 17% in 2021. 40% of Florida condo owners have faced special assessments in the last 3 years. The condo market in Florida is not experiencing a cyclical correction. It is experiencing a structural repricing, forced by legislation, accelerated by deferred maintenance, and compounded by an insurance market that makes the ongoing cost of owning these units increasingly difficult to justify at the prices that buyers were paying as recently as 2022. Force number 6: insurance still a crisis despite the headlines. Florida's insurance market has generated two kinds of headlines in late 2025 and early 2026. The first kind, Citizens Insurance is cutting rates. Private carriers are returning. The crisis is easing. The second kind, the average Florida homeowner still pays more for homeowners insurance than in any comparable state. Costs remain nearly 70% higher than 5 years ago, and 15% to 20% of Florida homeowners have chosen to go uninsured rather than pay what the market demands. Both kinds of headlines are partially true, and the combination of them tells the actual story. The average annual homeowner's insurance premium in Florida is $315, including wind coverage, as of late 2025. According to the Florida Office of Insurance Regulation, a figure that has risen approximately 6% from the year prior, representing a slowdown from the double-digit annual increases of prior years. For homes with $300,000 in dwelling coverage, estimates from multiple sources place average Florida premiums between $5,376 and $5,600 annually, compared to a national average of approximately $2,400. Florida insurance premiums are 181% above the national average, according to Longyield's February 2026 analysis. Industry data shows property insurance costs are nearly 70% higher than 5 years ago, according to the Naples analysis published 2 weeks ago. The good news, and it is real, is that the reform legislation of 2022 and 2023 is working. Citizens Property Insurance, the state's insurer of last resort, is reducing rates by an average of 2.6% statewide, with 60% of customers expected to see an average premium reduction of 11.5%, according to the December 2025 announcement. 17 new private carriers have entered the Florida market since the reforms. The worst of the insurance crisis, by most measures, has passed. But the worst has passed is not the same as the cost is normal. Florida homeowners are paying more than $3,000 to $5,600 per year in insurance, on top of elevated mortgage payments, rising HO fees, climbing property taxes, and the special assessments that the new condo legislation is generating. The total cost of homeownership in Florida has compounded to a level that is causing buyers to make different calculations than the buyers who drove the pandemic surge made. A home that requires $600 per month in insurance, $500 per month in HO fees, and is subject to uncertain future assessments is a different financial decision than a home where those costs were $200, $150, and $0. That difference is sitting inside every single buyer's calculation right now. And it is part of the reason inventory is at decade highs while buyer demand has failed to recover. Force number 7, the geographic divergence. Miami is not Florida. The most important thing to understand about Florida's housing collapse in 2026 is also the thing that makes it hardest to explain. It is not happening everywhere equally. Florida is not one market. It is a collection of markets moving at different speeds, under different pressures, toward different outcomes. And the single most significant divergence in the state right now is between Miami and everywhere else. Miami's housing market is being sustained by a force that no other Florida market can replicate. International capital. International buyers drove $10.4 billion in residential purchases in the Miami metro, a 46% year-over-year increase, with 60% paying all cash and 45% concentrated in the Miami Mesa, according to LongYield's February 2026 analysis. In Miami-Dade County, 67% of transactions in the $1 million plus segment are all cash purchases. In Palm Beach County, that figure reaches 88% for luxury transactions. Latin American capital, from Brazil, Colombia, Venezuela, Argentina, and Mexico, is flowing into Miami condos and Palm Beach single-family at a rate that has no equivalent in Cape Coral, in Lakeland, and Jacksonville. Palm Beach County single-family median prices actually rose 7% year-over-year. Miami luxury is holding. But Miami is not Fort Myers. Miami is not Sarasota. Miami is not Deltona or Kissimmee, or the condo corridors of Broward County, or the canal front neighborhoods of Cape Coral. The Cape Coral Metro posted the second worst year-over-year decrease in median home values of any major American metro in 2025, at 7.9%, according to Culture Map's analysis of Realtor.com data. The Wall Street Journal called Cape Coral America's worst housing market in June 2025. Northport posted the worst year-over-year decrease of any major American metro in 2025, at 8.6%. Northport is 20% below its August 2022 peak. Cotality flagged all 5 of the American markets with the highest risk of further price decline, and all 5 are in Florida. Tampa's Case-Shiller Index has posted 13 consecutive months of price declines. Jacksonville led Redfin's national rankings for worst year-over-year price performance multiple times in 2025. Orlando, while relatively stable compared to the Gulf Coast markets, is still seeing prices under pressure and days on market extending steadily. The divergence between Miami and the rest of Florida creates a communications problem for anyone trying to understand this market. When a Miami realtor reports that the market is strong, they are telling the truth about their market. When a Sarasota homeowner discovers their condo has lost 20% of its value in 2 years, they are experiencing the truth about their market. Both truths coexist in the same state. This video is about the truth that 22 million Floridians are living, not the truth of the 1% of buyers writing all cash checks for waterfront condominiums in Miami-Dade. The numbers that define this moment. Let us bring together every number from this video into a single picture. Florida's net domestic migration down 93% from 2022 peak from 310,892 to 22,17. Alabama now receives more net domestic migrants than the Sunshine State. Florida's statewide home values down approximately 5% year-over-year per Zillow, down 3% on the FA Repeat Sales Index, in negative territory while the national index rose 2%. Florida's foreclosure rate highest in the nation in 2025 at 0.44%, 1 in every 2 to 30 housing units, per Adams' full-year analysis. Foreclosure filings rose year-over-year for 11 consecutive months through January 2026. Florida's active inventory, approximately 167,000 homes statewide, 15% of all U.S. active listings, up 24.5% year-over-year. Median days on market 80 days, well above the 50-day national median. Florida's condo market 2 months of supply statewide, prices down 6.1% year-over-year, 92% of major condo markets declining simultaneously. Listings up 37% year-over-year, 43% of sellers reducing asking prices. Florida's insurance burden and premiums averaging $3,815 to $5,600 annually for a $300,000 home, 181% above the national average. Nearly 70% higher than 5 years ago, even as recent reforms begin to slow the rate of increase. Florida's worst individual markets. Northport 8.6% year-over-year median value decrease, worst in the country. Cape Coral 7.9%, Jacksonville 5.6% year-over-year per Redfin November 2025 data. Tampa 3.9% on Case-Shiller over 13 consecutive months. These numbers assembled together describe a market that has undergone a fundamental transformation from the conditions that produced the pandemic-era surge. Every structural support of that surge, migration inflows, investor demand, Insurance affordability, condo carrying costs, rate affordability, has either reversed or deteriorated severely. That is what free fall looks like in the data, not a crash, not a collapse of 50% overnight, a sustained, multi-front deterioration of every condition that created the market's peak, and a widening gap between what Florida homeownership costs and what Florida's buyers can or are willing to pay for it. The honest close, as always on this channel. Florida is not dying. Florida is not repeating 2008. The strongest data analysts monitoring this market, including the long-yield Substack analysis, the Adam reports, and the Redfin economic commentary, are not predicting a catastrophic crash that wipes out generations of appreciation. Homeowner equity statewide remains historically healthy, with aggregate equity at 71.6% of real estate value nationally in Q3 2025. Strong equity buffers mean that even as prices decline, mass foreclosures at 2008 scale are not the base case scenario. Miami's market has genuine structural support from international capital that insulates it from the dynamics crushing the Gulf Coast and the inland markets. Well-located, well-priced, single-family homes in strong Florida school districts continue to move. The insurance reforms are real and beginning to produce measurable relief. But not 2008 is a low bar, and the Florida homeowner who bought a condo in Tampa in 2021, who is now facing a $50,000 special assessment, paying $1,900 a month in HO fees, watching their unit's value decline for 13 consecutive months, and waiting for a buyer who is taking 80 days to materialize, that homeowner is not comforted by the assurance that this is not 2008. The conditions that made Florida the most coveted real estate market in America in 2021 and 2022 were extraordinary. They were the product of a once-in-a-generation disruption, a global pandemic, a remote work revolution, a migration wave that condensed years of population movement into 24 months. Markets priced for extraordinary conditions do not hold their prices when those conditions normalize. Florida's conditions have normalized. The prices have not finished adjusting. The free fall is not a metaphor, it is a data set, and the data set, produced by the Census Bureau, by Adam, by Redfin, by the FAFA, by Cotality, by Housecanary, and by Florida Realtors itself, is telling every person who owns property or is considering buying property in this state the same thing. The floor has not been found yet. Thank you for watching Discover the States. If you own or are watching this market closely, share this video and leave a comment with your city and what you are seeing in real time. Subscribe so you do not miss the data reports that follow.